Hey, and welcome back to another YouTube video. I went for a walk and checked my phone, and I seen that Amazon just did what I love to call a bear trap. Okay, real-time account at the top left over there, and then let's go back here. Although it is on my profit target right here, but if it breaks 25, okay, that's good. New stop loss should be somewhere under 25. So what's a bear trap? A bear trap is when it gets pushed to a lower low and makes bears try to short, and also shakes out some of the longs. This is very dangerous here. This could reject bad, but I'll let it play out right now. Ouch. And now I'm up about 200 bucks. I don't know if I want to give that up. Let's see how this candle closes. About 1-2 minutes till it closes. If the bids hold 22.25, that's going to be nice. But yeah, back to what I was saying. A bear trap is basically when it makes a lower low right here, and then it tricks bears into shorting, and then it tricks the longs into selling, getting the stop loss hit, and then bounces. So as I was walking outside, I entered off my phone as soon as I seen this action. This is called a hammer, which is a bullish reversal, and then also double bottom technically, because it bounced around 22.08. So right now, when I bought that contract off my phone as I was walking, it was about 17.85, and right now it's about 18.85. So technically, I think this could keep pushing to 39, especially if volume picks up, but it could also chop. That's what I want to avoid. So to know if it could chop or not, another thing I love watching is the S&P 500. So the S&P 500 right now is actually looking very strong, as you can see right here. That's a nice green candle right there. You actually push to that price. Amazon, I don't see a reason to sell here. Looks very strong, especially since it's holding a zone of mine, 22.15. It did reject a strong EMA level for me at 22.64. That would have been nice to play puts, but I didn't want to trade the downside. The candle just closed, and it closed under the level, but it's over the moving average, so I'm getting conflicting answers here. I could get out right now for a $200 profit, but I don't want to make the decision based on money. I want to make the decision based on price action, because that's what's going to keep you consistent. When you make the decision based off of money, what happens is that you're always going to sell a winner too soon, and you're going to hold on to a loser. That's a bad rejection. I really don't like that rejection right there, but it's still holding the EMA. So it's like, maybe if it loses the EMA, I'll get out. Here you got 22 level. If Amazon prints 21, I think I should get out, because then it could just pull back to 2015. I'm out. I'm not risking it. I really don't like that. I gave it this whole time, this candle, and I also gave it the next candle. I don't like how it opened. This could be a fake out, and it could keep pushing up. But look at that. Nah, this is disgusting price action. And one of the reasons that it's moving sideways like this is because, one, it's 115, so it's like not the best volume. If you compare the volume here to earlier in the day, it's barely anybody trading this. And then also it's between yesterday's high and low, or the previous day's high and low, for Friday's high and low. So, and the way that I see that clearly is because I have the green line that's charting the previous day's high, and then I have the red line that's charting the previous day's low. That's pretty much it. So I ended up locking in about $200 profit on that. Here's my executions for the day. Got in 934, got out 941, and then came back 103, got out 115 for a total profit on the day of 425. Not bad at all, especially in kind of a disgusting price action that we're seeing today. But yeah, that's pretty much it. There's no open positions currently, as you can see from this one. As you can see from this right here, there's no open position. Up $400. That's amazing. So if we continue to watch, the price action of Amazon right here, you can see that it wasn't really that worth it to trade. And another thing you can see is that how amazing and pretty accurate my levels played out. So I had a zone of 22.15 to 22.03, and exactly why I sold. This is exactly why I sold. I sold it for 1978 and 1900, almost 2K. And then right now the 2310 call is going for, no way, hold up, 1770. Wow, I would have broke even. And I just told you guys this. I just told you, if it has a hard time breaking 22.25, it's gonna go back to 22.15, and I did not want to lose that. So had I was still holding right now, I would be break even or something, because this is around the same price that I bought it. And just like that, look how perfect the rejection played out. I don't remember where I got this 22.25 level from, but because it's this color, most likely it's because 100% it's from the daily or weekly level, right? So these levels are literally gold to me, because it gives me a good understanding of where stocks have a high chance of either bouncing, rejecting, or if it breaks through, it'll be crazy, or like something crazy is going to happen there. And it's not a coincidence that this candle happened from 225 level, right? If I just sat here and hoped that it broke, then I would have got caught in this. If I wanted to sell the $200 profit, I would have sold it. But that's not the reason I sold it. I sold it because, as you guys seen from the previous, earlier in the video, I seen it reject 22.25, and I know that sellers, if they're holding a level, it'll just it has a higher chance of falling. So wow, yo, I would have been heated if I had $13 down. Hope doesn't pay, guys. Guys and gals, hope does not pay. This is a perfect example of how important your technical analysis has to be. A lot of people like to say that technical analysis is horoscopes for guys, or it's like it doesn't work, whatever. No, technical analysis is very important, and if you follow your strategy, if you follow your rules, it can be very rewarding. But if you're not able to follow your rules, and if you rely on hope, then it's going to be a very hard time trading, and you're going to lose all your money, especially if you're trading options. Been there, done that. So just to recap, I entered this trade because I seen a bear trap, went under the previous low, like the low of the day, in a zone, also printed a hammer, so I got in sometime during this candle, and then with a stop loss under 22.06, or under low of the day, because if it prints low of the day, there's a chance that it continues down. That's why my stop loss was there. And then my profit target was somewhere around 22.25, or if it held, it would have been 22.45, the next level, or maybe the next resistance there. As now, trade management is super important, because it's not about the plan before, it's about you actually following the plan during the trade. So if you watch here, it printed here, and then I sold at 115, so I sold as soon as this candle opened. And if you look at the 1 minute chart, this right here, as soon as this pulled back, I was like, I'm out, I'm good. And I made $200 profit. Had I held for like 3 more minutes, I would have been broke even. So I was able to save my profit because of following my rules, right? Now, can this, hold here, is making a higher low, and then can it push and make a new high? Sure, this could be a potential, new entry right here because it's holding this level with a stop loss here. But I'm good. I'm all right. It's too choppy for me. It's moving too sideways, and I'd prefer to get in at the edges of the chop, at the ultimate high and at the ultimate low. But if it's right in the middle, I'd rather not push my luck, especially since it's still under the EMA and it just had an aggressive red candle right before it, so this could wick down or whatever. But yeah, followed my stop loss. It never hit it, and I followed my profit target. As soon as I seen that it had a hard time going above it, I just got out, and 3 minutes later I would have gave up all my profit. So this was a A+ setup for me and resulted in a good green day. So thank you so much for watching. If you want to learn about all of this, technical analysis, risk management, psychology, all of that, I have a full online course where what's included in that is also personal mentorship and a Discord community chat, and weekly live webinars, weekly classes with the team. If you want to learn more, check out the website in my description box. Thank you for watching, and see you on the next video.